Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, May 28th, 2015. Thank you for joining me. As always, I like to talk about three topics with you each week to help you with your ETF investing endeavors. Now, right now, I want to take you back to December 31st of 2014. And on that day, New Year's Eve, I did a very special podcast, and it was entitled The 10 Actions You Can Take to Become a Better ETF Investor. And I still believe that those 10 things are relevant today. Let me name a few of them. One of the things I talked about was opening up a Roth IRA. I mentioned that you should consolidate your investment accounts to one brokerage firm. Obviously, that makes sense. You have one login and you would manage your taxable account, your IRA, your Roth IRA through one portal, through one broker. I talked about the idea of finding more money to invest in exchange-traded funds. I talked about how I wanted you to look at certain data on every exchange-traded fund you're considering investing in before you invest. And now, of course, we've got the ETFU database to be able to help you with volume and the assets and the type of the fund and the like. And one of the things I talked about was consider investing in China with a portion of your investment portfolio. Now, the reason why I talked about China is because last year in 2014, China became the largest economy in the world. Also, last year, China started a new bull market. The previous 3 years, China had been down some 35%. In 2014, we had a turn and China started moving into a new bull market phase. Now, in point number 2 I want to talk about today, I want to talk specifically about China. I want to share with you two charts. These are two investing ideas that relate to China. One is the ticker symbol FXI. And FXI is the equivalent of the Dow Jones Industrials for China. It represents a small number of companies. There's only 30 stocks in FXI, similar to the Dow Jones 30 industrial stocks. And it's some of the largest companies in China. But obviously in a bull market, all the different indexes have a tendency to go higher. And this particular ETF is enjoying a very good year. The reason why I'm focused so much on China today is because their stock market pulled back very drastically overnight. And depending upon the ETF and the index, they were down anywhere between 3 and 6% in trading today. And many times people get panicky when they see those kinds of moves. Now, the other chart I wanted to show you was ticker symbol ASHR. This is the China A-share ETF. This exchange-traded fund is different from FXI, it's a different underlying index, and there's 300 stocks in this particular ETF versus 30 stocks in FXI. The China A-share has done even better than FXI so far this year, but it was also down 6% on the day today. Now, as I look at the headlines, a lot of people talking about a speculative bubble in China and how Chinese citizens are now day trading and people are on margin. And this is typical of bull markets. And what I want you to understand in a bull market run, let me talk about the sector of biotechnology, for instance. Biotech has been the strongest individual stock market sector in the U.S. bull market during the last 6.5 years. And biotech is up 450%, where the S&P 500 is up 200%. So as we were going through the bull market, as biotech was continuing to perform better than every other market indice out there, people were saying that biotech was in a speculative bubble. You get that kind of market sentiment after you've had a big move. After biotech had its first 100% move, and the S&P was only up 30%, everybody was saying that, oh, biotech has gone too far and too fast. Well, biotech's up another 300% since it went up 100%. And so in bull markets, you have to be respectful of the trend. And the trend in China is up, it's higher, and it's going to have pullbacks along the way. Now, in successful ETF investing, we've enjoyed having allocation to both FXI and A shares, and we've got stop losses placed at reasonable levels. This one-day pullback is not going to trigger a stop loss for us. But one of the things I wanted to remind subscribers to successful ETF investing about, and to all of you who watch my weekly videos, is bull markets don't move in straight lines. And sometimes bull markets accelerate and go really fast for a short period of time, and then they pull back and they correct. It wouldn't surprise me a bit if any of these Chinese ETFs were to pull back 5%, 10%, 15%, 20%. That's not unreasonable after they're up 100% in a 12-month period of time. So you have to understand the dynamics of a bull market and realize that corrections are opportunities to be able to put money to work. Now, if you don't have any exposure to China, this brings me to my last point. I want you to go out to the ETFU database and check out the China page. There are 33 exchange-traded funds that give you access to China. And just as I told investors recently at the Money Show, as I talked about China, is if you have no China exposure, you want to start out really small. And so let's just say that you have a $100,000 portfolio. Maybe you want to start off with a 2% position, $2,000. You want to work that into a 10% position over a 90-day or a 6-month period of time. So you buy along the way and you buy on the dips, and if something pulls back 20%, you don't get hurt because you have a small allocation. You have to realize that there are some big changes going on in the world. China is the largest economy. It has significantly more people than the United States does. It's going to be a global leader as we move forward. It's just coming out of a 3-year bull market. We're 1 year into a 3-year bear market. We're 1 year into a new bull market, and that bull market usually lasts 3 to 5 years. So in my mind, I think that there's still plenty of upside ahead. Certainly, if there was some sort of disruptive force that takes the global economy completely off track, and we go into a new global bear market, China is not going to buck that trend. But barring the fact that there is an unforeseen event that takes us off this bull market run that we're in globally, I think China is going to be a leader, and China is going to be an area that is going to perform better than the United States going forward. And there are many, many choices for you to consider. So check out etfu.com, and for more on China, listen to my podcast this week, ETF Success with Doug Fabian. You can get it at iTunes. You can go to our website, ETFU. If you're listening to this video right now, you can click on the link on this page and connect right to this week's program. Well, with that said, thanks so much for tuning in. I'll be back again next week.